Monsieur Jean, and thank you, MP Blakey. And now we're moving to the Conservatives for 5 minutes, please. MP McLean, welcome back to our committee.
Well, thank you, and thank you, bank people as well. Mr. Marion, I'm sorry that you're not able. I've always found your comments very astute, so I'm sorry you weren't able to be heard here today. But let me ask a question of Mr. Gregory right away, following up on my colleagues' questions. Mr. Gregory, interest rates are going up. House prices are down an average of 14%. This is a double-edged sword for Canadian house owners in Canada. Can you tell us, when you talk about $350 billion in excess savings, how much of that is tied up in houses?
It's unclear where the bulk of those funds are sitting. I suspect that as these excess savings are being accumulated, some of those ended up becoming permanent savings. That was not available to be spent on a ready basis, either invested in financial markets or in housing. But it's not clear how much of
You're right. A good portion is housing. So your $350 billion, where does that number come from as far as date goes? Is it prior to the 14% devaluation in housing in Canada or after?
That amount of $350 billion, the way that's sort of calculated is that before the pandemic, Canadians were saving roughly about 2.5% of their income. And then the moment we hit the pandemic, the savings rate went well above that.
Yeah,
so anything above,
Mr. Marion, I'm asking you a direct question. Is your number $350 billion before the 14% housing slide or after?
Are you asking me
those
the question?
figures
Or
are as of the fourth quarter of 2022.
Fourth quarter 2022, $350 billion. Thank you. Mr. Gregory, one more shot at this. In Alberta, people have walkaway mortgages, different from most other provinces. If that option was available in every other province in Canada, how much of a hit to the balance sheet of the banks would be taken because of the downturn in housing markets if Canadians walked away from mortgages they were underwater on?
I'm not that familiar with that particular aspect of the mortgage market. Therefore, I really can't really comment on that.
Okay, let me ask another question from your comments. When you spoke about a 2% last quarter inflation rate in Canada versus 5% in the United States, is this a blind spot or is this a pretense that inflation is much higher in the United States than it is in Canada?
Well, the 2% was really reference to headline inflation over the last 3 months. If you want to really compare apples to apples, you're looking around a 3% pace in Canada at core inflation, around 5% in the U.S. So there's definitely more stubbornness on U.S. inflation.
Okay, well, thank you. That's exactly what I'm asking here. Is it a difference in calculation or is it a difference in the effects felt by citizens in each country?
It's partly a definition, but also you have more sort of rapid wage inflation in the United States, and U.S. households have actually begun to tap their accumulated excess savings. So they're continuing to spend in the face of higher inflation, which is not the case for Canadian households. Hence, our inflation seems to be cooling off more quickly.
Would the Inflation Reduction Act, the Inflation Exacerbation Act of $360 billion U.S., be having an effect on inflation in the United States? And can we expect the same if we have another $50 billion deficit budget here next week in Canada?
Well, the Inflation Reduction Act, and to your point that the name is a little bit of a misnomer, but it does, over time, contribute to deficit reduction. And from that perspective, it could be disinflationary. Part of that, the Inflation Reduction Act dealt with keeping healthcare affordable, which of course helps keep inflation down, particularly healthcare costs. The other part of that, of course, are supports for the transition to clean energy.
Excuse me, Mr. Gregory, I'm asking a direct question. Can we expect the same inflation in Canada if we commit to spending tens of billions of dollars in this budget that's coming up next week?
That's a hypothetical question. I really can't comment on that.
Well, it ties into the whole nature of the fact that if the government's spending money, we're going to have to raise interest rates to keep inflation down. Do you agree?
It depends what is been spent on. Any money that's spent on improving the capital stock, improving productivity, actually helps the inflation dynamics over the long haul. So, as my colleague Mr. Jean said, it depends on what policies are currently being practiced.
Thank you, and thank you, MP McLean. And now